employing people as GDP grows?
Well, see, this is an interesting question. This is the way I've been framing it for people lately, because you and I both know that, I mean, one of the charts that you highlight a lot is the labor force participation rate.
I want every small Bitcoin and Ethereum investor to listen very closely today, because the market is entering a stage that looks calm on the surface but carries pressure that can explode without warning once liquidity returns. And I want you to understand this before the move begins, so you do not make the same mistakes millions of investors made in past cycles. When markets move in slow ranges and the candles look flat, it often creates a false feeling that nothing important is happening. But in macro cycles, the quiet parts usually hide the biggest signals because they happen before the crowd sees them. And right now, those signals are forming again in a way that many people are completely missing.
There's a lot of people think like the end of the cycle, whether it's the crypto cycle, the business cycle, whatever, is this year, because normally it's 4 years. From what you look at, what I look at, that doesn't seem to be the case. We haven't even picked up, so we haven't had a cycle yet. So we've got this kind of stretched out kind of, the K side of it has been very long and grinding, while the top side of the K is obviously rocketed with liquidity and financial conditions.
For the last few months, stablecoin growth stopped expanding. And that small detail explains almost everything you see in the charts, because stablecoins act like money inside the crypto economy, and when that money stops growing, the entire system slows down, just like an engine running on low fuel. Prices do not move far because new money is not entering fast enough to push through resistance. And this creates long, tight ranges that make investors bored, stressed, and doubtful. They refresh charts every hour, they look for dramatic moves, and when they do not see them, they assume demand is dying or the cycle is ending. But nothing could be further from the truth.
See, that strength is so obvious to me. Sure, we'll get a slowdown and a correction period for a bit, but then after that, everybody's going to have to throw their money into this because there's no other choice.
What would speed the process up is if computers were managing the majority of the money. So they would take NVIDIA up because the probabilities, it makes no logical sense. But there's two forces. There's Wall Street and then there's passive investors who are doing nothing. And so there's a lot of money that isn't actively managed.
The real story is happening outside the crypto charts, where global liquidity conditions have been tight due to how the US Treasury handled the general account. Because almost $1 trillion has been sitting unused inside that account for months, and this blocks one of the most important liquidity flows that normally enters financial markets. This is not a small detail, because this trapped money is equal to several months of normal market liquidity, and as long as it stays locked, the risk markets become slow, dull, and hesitant. Bitcoin and Ethereum feed on liquidity, so when the flow stops, the charts stop moving even though the long-term structure stays healthy.
At this point this year, we saw on Ethereum earlier in the year, we saw on Solana, there was just a lot of supply that had to have been investors and people that own businesses and things that still needed to liquidate in something. And only now do I think, between the PMIs and the Fed cutting rates, that we're actually going to see that go up. I think on the crypto side, we're getting through the supply. And I've spent a lot of time, I heard your interview with Novo.
What small investors need to understand is that these liquidity conditions are about to turn, because the government cannot keep the shutdown effect running forever. And once the Treasury begins to release the funds inside that account, the liquidity flow will return fast, and crypto will react faster than any other asset class, because crypto has no friction and no bureaucratic delay. This is why I am warning small investors right now, because the shift will not be slow or gradual. It will be sudden and sharp, and by the time most people see it happening on the chart, the move will already be well underway.
Got it wrong. And people ask me, what is my projection? What is my prediction? Because of, as if that's going to help you. It's not. Let's say up a lot. Do I think Bitcoin 3x's from here? Yes, almost without question. But for some reason, everybody gets messed up in this.
There is another important part that most people forget, and that is the supply structure in Bitcoin and Ethereum. Because supply is tightening at the same time that liquidity is preparing to expand, and this creates a powerful imbalance that acts like a loaded spring inside the price. Long-term Bitcoin holders are refusing to sell, ETF buyers keep stacking, and most of the recent supply never returned to exchanges, which means most of the float is gone. Ethereum is dealing with an even tighter situation because staking contracts ETF vehicles, and long-term wallets are removing coins from circulation. And the burn mechanism keeps shrinking supply even when demand is not high, which means the moment demand increases, the price will respond extremely fast. Many retail traders think sideways movement means weakness, but sideways movement after a strong rally is usually a sign of strength because it shows the market has absorbed heavy selling without losing structure.
Okay.
I think we're going through a rotation right now where lots of non-economically interested parties are rotating out of the asset, and then a new cohort of investors are entering. A lot of Bitcoin was, for whatever reason, left in the hands of governments, in the hands of lawyers, in the hands of bankruptcy trustees.
What you are seeing now is not a fail cycle. It is a compressed cycle waiting for liquidity to return. And once liquidity returns, the moves can become violent and fast because the system is thin and demand will collide with low supply. This is why the range feels boring right now, because this is the adjustment phase where the market prepares for the next liquidity wave, the same type of setup we saw before, major breakouts in past cycles. I have spent decades studying global liquidity flows, and every time the liquidity curve begins to turn upward, the same pattern appears across markets: weak volatility, tight ranges, frustrated investors, and repeat complaints that nothing is happening. But the moment liquidity actually enters, risk assets explode, and the strongest moves always come from the assets that were most compressed and most doubted. And right now, Bitcoin and Ethereum fit that pattern perfectly.
This is November 2022. That was the perfect bottom. I mean, are you getting the picture here in regards to the majority often never being right? Markets don't top on depression. They top on euphoria. And that's still to come, in my opinion. And we think crypto is going to be the best performing asset in that environment. It's literally at the perfect bottom of this pullback.
People are distracted by the Nasdaq rally and the strength in AI stocks. But that is only because equities get automatic flows from pension funds and passive investing systems, while crypto does not get those flows. So crypto only wakes up when liquidity directly returns to its ecosystem. What I want small investors to understand is that the real trigger for the next major crypto move will not come from a headline or a news event. It will come from the moment the liquidity conditions flip, because that is the moment when all the pressure built during the quiet months finally releases. When that happens, the charts will not move in slow steps. They will move in large candles that show little warning and offer almost no time to re-enter. And this is why exiting during boredom is one of the most dangerous mistakes in crypto. People leave during the flat parts because they cannot stand the stillness, but the stillness is actually the foundation for the next expansion. Since, with Real Vision, I've been able to educate people about how this is the future of the new financial system, how it's going to solve a lot of the problems, even before I understood how big it was going to be for not just the financial system, but the internet overall. It's the new operating rails of the internet. The macro backdrop is also lining up because global central banks are preparing for easier policy, China is adding liquidity again, Europe is signaling upcoming rate cuts, and the United States will enter a political season where fiscal spending rises and monetary conditions soften. All of this flows into the same direction, which lifts the same assets every time: Bitcoin, Ethereum, and high-quality crypto networks with strong user growth and strong holding patterns. This is why I am giving this warning now, because if you wait for the excitement, you will be late, and the biggest gains always arrive before the crowd even realizes the conditions have changed. This is why I want you to stay focused now, because when the crowd finally wakes up, they will be reacting to moves that already happened, and they will buy into strength while early investors enjoy gains made during the quiet period that everyone else ignored.
In 2031, let's say, that Bitcoin will have continued its growth trajectory. Possibly its price cycle will have broken and it just gone into a long, slow grind upwards as people realize it's a game of accumulation. I think Bitcoin, by the year 2031, will be north of $12.5 million per Bitcoin.
The hidden truth of every crypto cycle is that the real opportunity never appears during hype, because hype signals the end, not the beginning. And the beginning always looks slow, dull, and frustrating, just like the current conditions you see on the charts today. These slow conditions confuse new investors because they mistake silence for weakness, but what you are actually watching is the market building a base that can support the next large move once the liquidity wave arrives and pushes the structure into expansion again. The most important factor that small investors underestimate is how liquidity shapes price movement faster than any news story or blockchain narrative. And once the liquidity starts to flow into the system again, the price action will shift before most people understand why it is happening. Liquidity acts like fuel across risk assets, and Bitcoin and Ethereum respond to that fuel faster than any traditional market because the supply structure is thinner, the float is smaller, and the reaction time is nearly instant. When the Treasury begins to spend again, when the Federal Reserve starts its cut cycle, and when global liquidity turns upward, crypto will feel the effect immediately, and the reaction will be sudden and sharp.
So let's take a look.
We have always had a 2030 target, the base case in the 700 to 750,000 range, the bull case in the $1.5 million range.
And she also says that it'll hit this price because of the market cap of gold.
This is why patience is not just a virtue in crypto. It is a strategy that protects you from emotional decisions during the flat parts that always come before the explosive parts. I want you to think about what is happening behind the scenes right now. Ethereum supply continues to shrink because staking removes coins from circulation, ETF racks remove coins for long periods, and the burn mechanism keeps cutting supply even during slow activity. These forces create a tight structure that makes the asset extremely sensitive to new demand when liquidity improves, and tight structures tend to produce powerful price reactions because there are fewer coins available for sellers. Bitcoin is experiencing a similar structure because long-term holders are stronger than ever. ETF demand continues to accumulate quietly, and miners have reduced selling pressure after recent adjustments. This is setting up a moment where conditions can align very quickly. And when that happens, the market will reveal strength that most investors did not expect based on today's calm environment.
My long-term forecast for Bitcoin is it's going up 30% a year for the next 20 years.
Is that literally your forecast?
That's what I said on stage in Nashville in July when Bitcoin was 65,000. I said it's going up 29% every year for 21 years. It'll be 13 million a coin as a base case in the year 2045.
Many people wonder why crypto is not moving with equities, even though the Nasdaq keeps hitting strong levels. But the answer is hidden in the difference between equity flows and crypto flows. Equities get constant inflows from pension funds, retirement systems, and passive investing strategies, while crypto does not benefit from these steady flows and depends primarily on direct liquidity conditions. When those conditions tighten, crypto slows much more than equities, but when those conditions loosen, crypto expands much faster than equities. This asymmetry creates frustration during quiet phases, but creates massive opportunity during expansion phases. And this is why understanding liquidity will always be more valuable than any headline or chart pattern you read online. Right now, the liquidity signals are shifting because the government cannot maintain the shutdown effects indefinitely. And once spending restarts, the Treasury general account will begin to empty, pushing money into the economy where it can reach financial markets. At the same time, central banks across the world are entering a new phase where the fear of inflation is fading and the concern moves toward growth, stability, and that shift usually leads to lower rates and easier policy conditions. These conditions combine into a synchronized wave that historically lifts crypto stronger than almost any other asset class. Small investors often realize this only after the move begins, but by then the early opportunity is already gone, and the next phase is harder to enter because fear of missing out replaces strategic accumulation. I want you to view the current range not as a sign of failure, but as a neutral zone that forms before liquidity returns, because the structure you are seeing is consistent with compressed volatility and reduced participation. Compressed volatility often signals that a major move is coming, because markets rarely stay in low volatility states for long. They either break upward or downward, and when the macro backdrop shows improving liquidity, the probability favors an upward break, especially in assets like Bitcoin and Ethereum that already have strong holding structures and supply tightening. This is why I keep saying the risk is not in holding through the boring period. The risk is leaving during the boring period and returning when it is already too late. When the market senses the first wave of new liquidity, the price will respond with large candles that often break the range in a single move, because the system has waited long enough and the pressure must release. These breakouts tend to be fast, loud, and emotionally intense, because investors who doubted the range start chasing the breakout, and that chasing fuels even more upside pressure. Once that pressure builds enough momentum, the move becomes self-reinforcing and creates a cycle where rising prices attract more demand, and more demand tightens supply further. This is how strong expansions begin, and this is why the strongest part of the cycle always comes after the quietest part of the cycle. If you understand liquidity, supply, and patience, you will not panic during slow periods, because you will know that slow periods are only pauses inside the larger structure, and these pauses are where the real opportunity lives. When the liquidity wave hits, it will bring energy back into Bitcoin and Ethereum faster than the average investor expects. And this is why I am warning small investors now. Crypto never rewards those who wait for excitement. Crypto rewards those who understand the structure before excitement appears. The quiet is temporary, the pressure is real, and the next stage will move much faster than anyone is ready for.